2025, when it comes to growing your wealth, who's better equipped to guide your financial future? A seasoned human advisor or an advanced AI powered by cutting-edge technology? The battle between human intuition and artificial intelligence isn't just tech talk anymore. It's a real dilemma impacting millions of investors worldwide. Today, we dive deep into the showdown. AI versus human financial advisor. Who truly grows your wealth faster in 2025? For decades, human financial advisors have guided clients through turbulent markets, offering personalized strategies shaped by experience, emotion, and relationships. But now, AI-driven platforms, armed with vast data, lightning-fast processing, and machine learning models, are transforming the landscape. Robo-advisors promise efficiency, lower costs, and even greater returns by eliminating human biases. Yet, human advisors bring empathy, creativity, and adaptability far beyond algorithms. So, how do these two approaches stack up in today's complex financial world? The strength of human advisors. Human advisors excel in understanding clients' unique goals, fears, and life circumstances. Their personalized touch helps build trust during market volatility when emotions run high, a crucial advantage in achieving long-term wealth growth. Human intuition can identify nuances in market trends or emerging opportunities that AI might miss. They also provide comprehensive financial planning beyond investment, covering taxes, estate planning, and behavioral coaching. The rise of AI-driven financial advice. AI platforms analyze vast amounts of market data instantly, spotting trends, risks, and optimizing portfolios with precision. They employ advanced algorithms tailored to your risk tolerance and financial goals, offering 24/7 access and automated adjustments without emotional influence. Additionally, AI revolutionizes accessibility, enabling investors with smaller portfolios to access sophisticated strategies previously reserved for the wealthy. Cost efficiency and data-driven decisions often result in competitive, sometimes superior returns. Performance comparison. Who grows wealth faster? Multiple studies show AI-powered robo-advisors often deliver better average returns with lower fees, especially for passive investment strategies like ETFs. Their ability to rebalance portfolios promptly and tax-optimize can enhance growth over time. However, in complex or turbulent markets, human advisors may offer better crisis management by adjusting strategies flexibly and reassuring clients, reducing impulsive decisions that could harm portfolio growth. The hybrid future. Best of both worlds. Increasingly, the most effective financial advice may come from combining AI's computational power with human insight, a hybrid model. Advisors utilize AI tools to analyze data, streamline portfolios, and identify opportunities, while focusing their time on relationship management and personalized guidance. This synergy harnesses speed, scale, and empathy, potentially maximizing wealth growth while maintaining trust and emotional support. In 2025, neither AI nor humans have full monopoly on financial success. AI excels in data-driven, efficient wealth management, while humans provide critical emotional intelligence and nuanced advice. The smartest investors are embracing both, letting AI crunch numbers and humans craft strategies that address the heart as well as the wallet. Thank you for exploring this dynamic showdown between AI and human financial advisors. Whether you choose a robo-advisor, a human expert, or a blend of both, remember, the best path to growing your wealth balances technology with trust, logic with empathy, and data with wisdom. Here's to smart investing in 2025 and beyond.